good recovery from the lows, by the way. We got down to around about half of where the shares are currently trading, 10.80 now. The low was around about €5 per share last year. But then there comes a problem. When you start looking at the valuation of these stocks, you realize that they are still really insignificant in terms of valuation compared with the US. And interesting, that conversation we just had with John Ricciardi as well. For instance, Deutsche Bank trades on a 0.377 price to book going forward. Isn't that extraordinary? 0.377, when quite frankly, that's around about, I don't know, a fifth of the mean US peers who trade at least 1.5 times price to book for a well-rated bank that covers investment banking and commercial and private banking in the United States. UBS fares a bit better, by the way, nearer the 1 mark, but again, nowhere near the valuations on the US peers. So you ask the question, is this about the structure of the banks individually, or is this about the structure of the European banking setup and the European economy? And whilst there is a certain degree of self-help that can go on at UBS, Credit Suisse and Deutsche Bank and all these European banks, the fact of the matter is the European interest rate scenario, which is where we join the show, talking about what we're going to hear from the ECB, whether they're going to remain more dovish, whether the PEP program is going to create more problems or actually create more support for Europe as we potentially go into a fourth wave as well. And you see that there are a multitude of problems, not least the fact as well that they are struggling on another level to compete on the investment banking scenario. So I think, yes, there is a certain amount the European banks can do, but there are certain reasons why we will always be trading at a significant discount until there are major structural changes in the European economy and indeed how the European central banks are valuing money.
Interesting as well, as we switch to UBS, that Axel Weber, who we know has been a rock as chairman over at UBS with deep contacts within the central banking community because of his past, is now moving on, and we get a new chairman coming from Morgan Stanley. As we reported on UBS over the years, I think what's been instructive since the global financial crisis is this is a bank that has progressively de-risked and expressed its focus mainly as servicing a high net worth client, particularly in Asia, but of course globally. And it's been a shift that we've seen away perhaps from investment banking, away from some of the prop desk activities that are perceived to have been more risky post the financial crisis. And Sergio Amotti and Axel Weber seem to work well together in the 9 years that Sergio Amotti was there in gradually shifting the focus for UBS. Again, this looks like a very interesting appointment that we now get the head of Morgan Stanley, who perhaps will bring fresh eyes to whether UBS is leaving money on the table with its operations outside of servicing those high net worth clients.
All of the above. And let's be honest about it. You and I have, we shouldn't say this, but we've really enjoyed speaking to Axel Weber over the years. He always tells you something you don't know, always seems to speak some sense as well. I mean, whereas you get these weird strategies from so many European bankers, this gentleman has always talked sense. So it's been a privilege, really, in many ways to speak to him. But there is a problem. And the problem is that strategy you talked about shifting away from the riskier investment banking strategies towards the high net worth individual. Well, it's done something. It's bought them a premium over their key rival, Credit Suisse, which basically trades at about 0.48 times forward price to book, and UBS trading, as I mentioned, just under 1. But it's got them nowhere near yet the best in sector, the best in country, the best in demographic. And that is Julius Baer, which of course has come out with some numbers, reassuring numbers yet again today. Julius Baer trades pretty much double the price to book going forward that UBS does. So I hear what you're saying. It's brought them a degree of stability. But if we're looking in terms of where the valuation of the company is compared to the best in sector, and again, I appreciate Julius Baer is a different animal and a lot smaller entity as well. The fact of the matter is there is still a very long way to go.
No, and just to wrap up here, I mean, when we last spoke to Ralph Hammers on the numbers, what was interesting, I think, was how keen the bank was to stress its push into the United States with this new digital service that they were offering existing clients. And I know there's been some skepticism about whether there is enough support, enough momentum, enough new on the table to keep those US clients interested. And perhaps that's part of the reason why now we have a chair from Morgan Stanley, that the desire is to have someone with greater insight perhaps into what the US client is actually looking for. Your thoughts always welcome on this. You can get in touch with us, obviously, through Twitter and via email. But we'll count you down to the open at this point, as we are 26 minutes or so away from the start of the European trading session. And in spite of concerns about the protests and about rising COVID cases and the new restrictions in some European countries, the early call on the futures is that we will get a positive start to the equity trading session.
23 and a half minutes to go before the start of equity trading in Europe. These are your headlines. European equity markets are set to open modestly higher, even as protests against fresh COVID restrictions rock the continent, with violence erupting in Brussels and Amsterdam as fresh cases continue to surge. Germany's gender-balanced coalition nears completion, as sources tell CNBC an announcement could come as soon as Tuesday, with key roles for the FDP's Christine Lindner, as well as the Greens' Annalena Baerbock and Robert Habeck. US private equity giant KKR launches a €10.8 billion bid to take Telecom Italia private, after the CEO, Luigi Gubitosi, comes under fire for the telco's performance. Plus, Vonovia shares trading in the red in the pre-market after announcing an €8 billion capital raise, in part to help fund its takeover of Deutsche Wohnen.
Welcome back, everybody. So a quick look at where the markets are as we run into the European trading session. Just a couple of things to pull out from the Asian session here. The Nikkei 225 hasn't budged much at all. We're just in positive territory here. Interesting that the government of Fumio Kishida has responded positively to Washington's desire for extra oil reserves to be released. They say they are looking at that at the moment. So some positivity around the Japanese session right now. Be aware that the Evergrande EV business shares lower on the announcement of a potential share placement. I think they want about $350 million or somewhere close to that, which has, again, spooked investors who are worried about debt levels in some of these Chinese property-related companies. But this is the EV business we're talking about primarily. The Shanghai Composite up 0.6% here, and Australia, as you can see, down around 0.6%. The European futures haven't really moved a whole lot while we've been on air. Some improvement maybe in the outlook on the CAC and on the FTSE, but the European markets appear to be shrugging off concerns around these restrictions on the unvaccinated in many countries and the fact that we've had pretty ugly demonstrations around a lot of the continent against the measures that are being taken by their own governments. The US futures, how do we look? It was a negative close on a couple of the major bourses in the United States. The Nasdaq, the only one closing in positive territory. But as we look at the early calls for the US Open, as you can see, the expectations there are that we will start in positive territory, with the Dow indicated up well over 130 points. Steve.
Yeah, very interesting. The worst form of the big indices last week was the Russell 2K, down 3% as well. But let us move on. The US House of Representatives has passed President Joe Biden's $1.75 trillion Build Back Better bill. A wide-ranging social spending package, which includes investments in healthcare, child education, and combating climate change. The bill, though, of course, as you know, will need to pass the Senate, where a defection from any of the Democrats or independents could still sink it. The package could also be altered by the senators, which would then, of course, as you also know, send it back to the House for another vote. US President Joe Biden is expected to announce also this week who should lead the Federal Reserve after the incumbent chair, Jerome Powell's term comes to an end in February. Powell's in a strong position to be reappointed for a second four-year term as Biden reportedly looks to secure continuity at the central bank. But progressive Democrats are pushing for the Fed board member Laura Brainard, who is considered, well, is she? Even more dovish than Powell apparently in her monetary policy views, but she's seen as slightly more hawkish on the bank regulation front. Bank of England Governor Andrew Bailey has said the central bank will have to raise rates, quote, if the economy evolves in the way the forecasts and reports suggest. Speaking to the Sunday Times, Bailey warned that the situation is febrile, which is a metaphor for feverish, isn't it? With data not giving a consistent picture, suggesting a rate hike in the December meeting is still up in the air. The bank surprised the markets last month by keeping rates unchanged, Jeff.
Well, let's pick up and talk a little bit about the French industry minister, Agnès Pannier-Runacher, who's told CNBC that while countries must keep an eye on inflation, French consumers had a different fate to their European peers.
We need to follow closely the question of inflation because it's a worldwide question. It's not just focused on France. But I believe that we have demonstrated the fact that we have the more powerful social system within Europe and the world. When you see that only that the people in France has increased their purchase power by 0.6% in 2020, and that those last 5 years they have increased their purchasing power by far more what happened 10 years ago, then you can see that there is also action taken by the government. So I believe this is assessed by the population, that they are pushing, and this is quite normal in a year when you have some decisions to be taken. But I feel more, calm and feeling of the specificity of the moment of the action taken by President Macron, the fact that he's completely focused on what is needed for his country than 3 years ago when we have to face a yellow vest protest.
Just finally, let me ask you about the nuclear situation, because the president has recently supported these small modular reactors. There's some concern here from some other political parties are pushing back against renewable sources of power, wind and solar. What sort of certainty does business need from the government at this point around what constitutes green power, green technology?
So the situation is quite clear. We will need to increase massively electricity production with low carbon sources of energies. So there are two low carbon sources of energy, renewables on the one hand, nuclear power on the other hand. And as we will need to develop electricity production massively, we will need to develop renewables massively. And it is really, a challenge. We need especially sea wind power, but we need also, solar power. We need every kind of renewable energy. And on the other hand, we will not be in a position to deliver or to avoid blackouts if we are not able to be supported by nuclear energy. These are facts. These are the scientific facts. And that's why we have these two-pillar strategies regarding energy. And this strategy is not very different from the one of the United Kingdom. It's interesting to see that they invest in nuclear energy and they invest in renewables. And this is very legitimate because, in fact, those energies are produced in your country, so you don't have to tackle geopolitical issues. You are not dependent on, a crisis somewhere else in the world.
The French industry minister there talking to Karen. Well, what are the impacts of the new lockdowns likely to be on growth going forward and levels of indebtedness around the Eurozone? What impact are we likely to see then on sovereign bonds in many of these economies? Well, Moody's has put out its new report on 2022, and there were some encouraging themes in there about improving growth and what that would mean for management of sovereign debt. But I wonder to what extent that picture now seems to be changing. Sarah Carlson joins us, the author of the report and vice president at Moody's. Sarah, good morning to you and thanks for giving us your time. Is that a challenge here, just trying to figure out how much of that report now is still relevant going forward, given that we've got, at least 4 countries, I believe, in the Eurozone that have introduced new pandemic-related restrictions?
Thank you very much for having me, and good morning. We've always considered that pandemic-related health developments were one of the downside risks that we have to consider to growth. But one of the things we still think is unlikely is the kinds of prolonged, very widespread lockdowns that we saw last year and the year before, earlier this year and last year. Reason being that there are a lot more public health management tools available that had either just been developed at this time last year or didn't exist at all. So no, absolutely not. And I mean, the other themes of our report talking about the increase in debt, the importance of next generation EU are still as relevant today as they were when we published the report last week.
Is the expectation then that we may continue to see debt levels rise here as governments try to figure out how they need to respond at this stage to this new wave?
If governments need to use their balance sheet to intervene to support the economy, then that would be something that would delay the stabilization or reduction in debt loads in Europe. But again, I think that's jumping ahead quite significantly because it's not really clear that governments would need to engage in the kind of very large-scale intervention to support the economy that they did in 2020 and earlier this year.
Sarah, I have this question a lot, and I bet you have this existential question over at the rating agencies all the time as well. Does it matter anymore about debt? And I'm not trying to be pedantic about this, but the fact of the matter is, you at the rating agencies and everyone else have been talking about debt levels as mattering forever. And nowadays it doesn't seem to matter really, especially when you've got Paolo Gentiloni trying to canvass opinion about whether we should just rip up the old Stability and Growth Pact as well. And then I look at your own charts with Greece expected to be up 191% or 291% debt to GDP next year. Italy will just be pottering along at 149, Portugal 122, Spain 118 as well. Do these levels actually matter anymore because of this Japanification we're seeing?
High debt levels do matter. I mean, what you've seen in Europe is an interesting trend of increasing debt, but actually improving debt affordability as more expensive debt rolls off and is replaced by cheaper debt. However, low interest rates will not stay around forever. We think that is finite. And the larger a country's debt stock is, the more vulnerable it is to any increase in interest rates. Now, I should say that if you have some demand-led, very strong demand leading to inflation, which causes central banks to have to hike rates, that is a different story, and that's not necessarily a negative thing. However, if you see significant increases in interest rates, the countries that are more vulnerable to that are, of course, those countries with the higher debt loads.
But Sarah, I agree with you, but I feel I'm quite frankly old-fashioned worrying about debt. If the Japanese can get away with 250% debt to GDP, why can't the dear old Europeans stay north of 100% forever?
Well, I mean, the reason why Japan is able to carry on with very high debt loads like that is specifically because it has very cheap funding rates. But there are quite unique aspects of the Japanese bond market, particularly the very large domestic base of investors that it has. We don't tend to see that in Europe, and therefore European governments would be more vulnerable to higher interest rates than what we've seen in Japan. Japan is in really a unique situation with regard to other advanced economies.
It's a long-term, bigger conversation, Sarah, but I appreciate you sticking with the line as well, which, again, historically, I completely agree with you. I'm just wondering if I'm wrong. Nice to speak to you today, Sarah, and I'm enjoying reading your report. Sarah Carlson, who is Vice President
to speak to you.
Over at Moody's. Thank you. Right, coming up on the show, dialing up the pressure. See what the producers did there? That was funny. KKR makes a takeover bid for Telecom Italia. Get it? Dialing Telecom. Valuing the company at almost $11 billion. We'll have more witty puns after the break.
Shares in Vonovia are seen lower in pre-market trade following its announcement of plans for an €8 billion capital hike to help pay for its takeover of rival Deutsche Wohnen. The German real estate business finalized its takeover bid last month. Ericsson has announced it's set to acquire cloud communications firm Vonage for just over $6 billion, representing a 28% premium to Friday's closing share price. The Swedish mobile telecoms equipment maker says the merger has been approved unanimously by the Vonage board and should be completed in the first half of next year, adding the deal is in line with its intent to expand its wireless enterprise business.
Well, how do you explain a problem like Telecom Italia? American private equity giant KKR has made a €10.8 billion takeover bid for Telecom Italia, or more than 33 billion euros, including debt, the old EV. That's not electric vehicle, it's enterprise value. Telecom Italia says the offer, which represents a 46% premium on the group's Friday closing price, is intended to be friendly. The CEO, Luigi Gubitosi, has come under pressure from top investor Vivendi after two profit warnings in the same quarter. This after the tussle between the French media giant and US activist fund Elliott Management, which saw his predecessor sacked 3 years ago. Jeff, this is an eternal problem, highly indebted, lots of aspirations for Telecom Italia. You can add in the CDP, which is the government Cassa Depositi e Prestiti, which also has a near 10% stake as well. And you see it's very complicated, as ever is the case. PE wants the big growth, nice bits, and wants to scythe off the government-regulated fixed line business as well. This one has been going on for a long, long time. Lots of different levels or multiverses to it, one should say as well. But I'm not sure how this one ends because it's very, very complicated. Add in the fact, of course, that you're adding fibre throughout the country as well, and a lot of investment needs to go into this company as well. It is stunningly complicated.
It's an amazing deal if it ever happens. And I'll just make that comment as we wrap up and go to break here. Mario Draghi has an opportunity to demonstrate that this is a new Italy. And this deal potentially could be the signature for that. This could be the Italian government saying we are open for business. This is a free and open economy. We welcome international cross-border M&A. And this deal needs to be done because, as some may have commented, it has the potential to turn a dray horse into a greyhound. Let's see what happens here. Is it the same old Italy, or is Mario Draghi now leading a free marketeering technocratic government that means Italy is open for business? Answers on a postcard, please. We will take a break. We'll be right back. Everybody stay with us. That's the early call on the European Open. We will see a positive start to the trade if the call is right. anything more emblematic of the lockdowns in share price terms as Zoom? And even though I'm here to do the European Open this morning, I just wanted to start with that thought, because Zoom will report earnings later today in the United States, and the share price has been down something like 20% as the market has readjusted expectations about how a business like that can do if we're all coming out of lockdowns. Now, you can see where I'm going with this, because are we all coming out of lockdowns? The protests that we've seen erupt around Europe have lifted this idea, or raised this idea, that maybe we now need to think again about what this fourth wave in Europe will mean for a lot of the companies that we thought were going to do better once we all came out of lockdowns, and for those companies that have had adjusted expectations because they did very well in the lockdowns, and now people think that they will do less well. So we will look forward to Zoom, but I wonder what we'll get in this early European session. Will we get any indication that investors actually are using or voting with their investments as they look at different parts of the equity market? So let me just show you the broad picture. This is the Stocks Europe 600, the blue chip index that is currently up about 0.2%. Let's now have a look at how that breaks down in sector terms, because that will give us a sense of whether investors are beginning to adjust expectations as a result of these new lockdowns. We've got oil and gas and household goods down here at the bottom end, utilities and food and drink. To my mind, oil and gas, household goods, utilities, a lot of growth issues in those sectors. And the question is, if you are adjusting your growth expectations because of a cut in aggregate demand, because people cannot get out, then oil and gas inevitably, and some of those cyclical sectors would be the ones impacted here. As I walk around the curve, chemicals, financials and insurance, technology also in here, up about 0.3%. What have we got round the other end of the curve? Banks, basic resources, and travel and leisure. Well, maybe not so much then, if travel and leisure is still hanging on to gains at this point, up 0.7% right now. And the telecom sector, oh, well, I wonder what that could be about. I think we just talked about it, didn't we? Is there now blood in the water for the European telecom space? Do you know there are over 100 telecom companies in Europe? And a lot of people think that's too many by a long chalk. If you look at the United States, where there are 3 or 4 that dominate the space. Some argue that that's oligopolistic, if I can get the word out. It's Monday morning, just put the teeth in. The point is, are there too many telecom companies in Europe? And have we seen this bid now for Telecom Italia raising the stakes? We also talked in the recent past about bids for BT, or speculation of, and of course for some of the other telecom majors, those old state telecom businesses that have tried to change but ultimately sit with divisions or businesses that companies like KKR are licking their lips over and saying, it's non-core. We can sell that off and we can pay back what we spent on this business and still be left with a core business that is strong and has potential. What about the geographical breakdown? Let's just show you the European bourses. This is where we stand then. So the guys who put together the calls on the early trades, largely getting today's session right, with the FTSE up 0.3%. We're still a little way away though, aren't we, from that 7,300 mark that seems to have become psychologically important for the market recently. The Zetrezax and the CAC also in positive territory here. Let me go back to this telecom story, because it is a very important story in so many ways. Are European economies open to cross-border M&A? Are some of those traditional state giants, the foundation businesses of many of those countries, now available for foreign purchase? American private equity giant KKR has made a 10.8 billion euro takeover offer for Telecom Italia, or more than 33 billion euros if you include the debt, which is very important. Telecom Italia says the offer, which represents a 46% premium on the group's Friday closing price, is intended to be friendly. The CEO, Luigi Gubitosi, has come under pressure from top investor Vivendi after 2 profit warnings in the same quarter. Claudia joins us with more and is going to help us understand, of course, what is quite a complicated story. Claudia, good morning.
Good morning, Jeff. Yeah, it is a complicated story, but as you put in the elements that you were talking about, an industry that is facing an identity crisis with many players, a company like Telecom that has a strategic asset like the broadband network, a stock that's trading down significantly, and an unhappy shareholder like Vivendi, who is the major shareholder with almost a 24% stake in Telecom Italia. Well, that's the perfect mix for someone like a private equity fund like KKR to come in and make a move like the one they did yesterday. Now, the offer has come out, as you stated, that you put the numbers on that offer. Remember, the stock is down, at all-time lows, as you can see from the charts. It's down about 40% since the start of the year. This 50-cent offer seems to be an offer that's sort of just the beginning of what is going to be a long process of probably other offers yet to come. Who are the players? Well, Vivendi, the major shareholder, as we were saying, of Telecom Italia, who is an unhappy shareholder, of course, due to those profit warnings that have come out in terms of its operations. The company is not doing very well. And then there are the issues, of course, with the network, whether to spin it off or not spin it off. Luigi Gubitosi, the CEO of the company, would like to hold on to that and would like to keep the network within Telecom Italia. Then there's another player, which is CDP, who is the state lender who has a 10% stake in Telecom Italia. And, the government. The government did come out with a press release yesterday after the announcement of this offer was made, this friendly offer. The government is going to put together a team to analyze what KKR is actually offering, trying to understand the strategic value of this. There are employment issues. There is the golden power issue. As you remember, the government can, since this is a strategic asset, come in and possibly oppose this offer. But what's interesting, of course, is what's going to happen in the next days, and that is very much an unknown. Remember that there was on Friday a group of 11 board members that asked for a board meeting, extra board meeting on Friday for the 26th of November. That was already planned before the offer came out. So, they were, saying that they were unhappy with what the management was doing. So we will see for sure management changes, or most likely rather management changes already on Friday, November 26th. And then this due diligence will go forward with KKR. So it's, of course, again, the big question is what's going to happen in terms of the network, this broadband network. Will it be spun off or won't it? Is that what KKR wants to do once they delist the company? So there are really still a lot of moving parts to this offer. But what's clear is that this is going to put a lot of focus on the telecoms industry in general in Europe and, of course, in Italy. So we'll keep watching closely to see how this evolves.
Yes, and there will be members of our audience who are curious as to why we don't seem to have any movement on the share price at the moment. My understanding is that the shares were called up as much as 30%, which meant that immediately trading curves came in on the Italian exchange, which means we will have to wait and see where this share price ultimately starts the day once the exchange lifts those trading curves. Claudia, while we've got you, let me just ask you, I've been talking a little bit about how this could be an important test case for Mario Draghi and for the Italian economy. Is Italy open for business and international M&A?
Yes, of course, that is, one of the questions is the government going to, in fact, some say, are they maybe not behind it, so to speak, but are they in approval, quote unquote, of this offer? Because what's interesting is you would normally not see an offer like this be put on a table unless there was some idea that it is something that is feasible, something that the government would, in fact, somehow back up. And the press release that came out from the government yesterday, the way that the wording was to this press release makes you understand that they are open to evaluating this offer. So it will be an important test. It will be a test to see, where they stand on this front. And so, yes, it is an important test for this government and, more than that for Italy to see, as you're saying, if they are open for business. But, there is, of course, the strategic aspect to this whole story. The green power is to protect these assets should the government want to do that. So it'll be interesting to see also not only how it ends up, but how they play it and how they explain it.
Yes, absolutely. Claudia, thank you so much for that. And of course, being a private equity company, the dynamics are somewhat different, aren't they? From a trade buyer who perhaps comes from another European company, that may be more difficult to push through. But we'll have to see whether there are conditions attached to this deal in terms of hiring and firing, and limits on what business units can actually be sold on. Claudia, real pleasure talking to you, and we will continue to catch up on this story. Ericsson has announced it is set to acquire cloud communications firm Vonage for just over $6 billion, representing a 28% premium to Friday's closing share price. The Swedish mobile telecoms equipment maker says the merger has been approved unanimously by the Vonage board and could be completed in the first half of next year, adding that the deal is in line with its intent to expand in wireless enterprise. Should we have a quick turn back to that Telecom Italia board? I'm being told that we are now open. We do have a live quote. And as you can see, the share price sitting somewhere around 25 to 60 to 26% higher at this stage. We'll continue to keep an eye on this. Any commentary that we get from the Italian government at this point could be very significant to where this share price finishes the day or trades intraday for that matter. Moving on, Deutsche Bank, the bank says it's picked the former CEO of Aegon, Alexander Weinans, to be its next chairman. Weinans, who is a relative outsider but has experience in insurance and banking, will succeed the lender's longtime chairman, Paul Atleitner, in May. Deutsche is looking to move forward after a period of poor performance and uncertainty exacerbated by regulatory crackdowns in Germany and in the United States. And just like buses, you don't get a change of chairman for a while and then two come along at the same time. UBS has appointed the former Morgan Stanley president, Colm Kelleher, as its next chairman. Kelleher, who retired in 2019 after 3 decades at the US investment bank, is set to succeed the outgoing chair, Axel Weber, next year. The Swiss lender has been looking for a candidate who will work closely with the new chief executive, Ralph Hammers. The company's shareholders will vote to approve Kelleher's appointment at the next meeting in April. Strong numbers out of Julius Baer this morning. The bank posting a strong performance so far this year, with its gross margin coming in at 82 basis points. The first 10 months of the year is the statemented period they've given us, while its capital ratio has jumped to 16.7% from 14.9% at the end of last year. The Swiss lender says its performance was helped by, quote, strong growth in client assets and improvements in cost efficiencies.
Excellent, Jeff. Right, let us move on and take a look at some of these issues with Arnab Das, who is the global market strategist at Invesco. Arnab, before we get on to your excellent pieces about bond vigilantes and low bond yields, can I just ask you a question which we were speaking about with our guest an hour ago? And this is the valuation of European equities. Are they cheap or are they expensive? And it's a very basic question because they're cheaper than US stocks, but they're more expensive than their historic parallels as well. And of course, they always trade at a discount to US stocks. So we couldn't work this one out an hour ago. I wonder if you've got some clarity on it for us.
Well, I think you're right. They are expensive relative to history, probably with good reason, and they're cheap relative to the US. Also for good reason. Look, I think, notwithstanding all the challenges that we have now with, I don't know how many, the nth wave of COVID in continental Europe, the stocks in Europe have been boosted by reopening, by cyclical recovery and by inflation, which at least raises the prospect that at some point in the future, we'll get somewhat higher interest rates and maybe a somewhat steeper yield curve, right? Because Europe is, has indexes that are cyclical, that are financials, that are kind of old economy stocks, whereas the US has become increasingly dominated by long duration, new economy, technology growth, et cetera, right? So I think, the bigger picture here is still that we are, although we might have a bit of a challenge in the short term with the pandemic, the bigger picture is still that we're overcoming it. Maybe it'll take somewhat longer, a few more months, but the reopening story will probably resume. And throughout, we'll probably have, it looks like, a bit more inflation pressure for a bit longer than we had expected. I'm still myself sort of in team transitory, but it does look like the inflation pressure will be higher for longer than expected, and that will probably have an impact on rates and on the yield curve at some point, which should be supportive for Europe relative to the US.
Right, well that's great, and good luck to Team Transitory on this one as well. They're having a tough time the last few weeks. Now, look, one thing that you've said others worry about, and I think we all worry about, and we all consider, is whether the central banks are suppressing volatility. Well, for a start, are they suppressing it? I would probably guess they are. If so, how long can they keep the cork down on that fizzy bottle of champagne?
Well, champagne sounds good. I think they have been suppressing volatility, and they're moving away from doing that with such concerted force because of the inflation process. And I think you see that in the behavior of yield curves, and starting to see it a bit in the behavior of currencies, right? So we've had a kind of bear steepening in the short end as it becomes clearer that central banks are moving to raise rates or moving towards normalizing policy and then raising rates depending on the central bank. And meanwhile, the long end has come back down, or at least remained quite capped. So there's a bit of volatility in the short end. There's a bit of volatility in currencies as a result of that, a bit of repricing. And so I think we are moving, step by step, one step forward, two steps back, whatever, two steps forward, one step, depending on the country, we are moving towards normalization, maybe not towards full-blown central bank tightening, if you believe the transitory argument. We still need to move towards normalization because inflation is more persistent and higher than expected. And that implies that there won't be such a strong ceiling on volatility as there has been for the last year and a half, and maybe even for the last decade.
Arne, can I ask you what your view is of the latest restrictions that we've seen on the unvaccinated in Europe and the spike in protests around continental Europe? This morning, it doesn't seem to be having any impact on investor appetite to pick up risk. But what do we need to understand about this latest wave and what its potential impact could be on equity market interest?
Well, I think the markets are going to largely look through this round of restrictions, because I think we've seen that Europe did have sort of a double dip after the lockdowns, earlier in the year, and the sort of secondary sets of lockdowns that we've had after the first one. But that dip was much smaller than the first one, obviously, because the service sector hadn't fully reopened. That's still the case. There's some reopening that's taken place, but it's not fully done. International travel is not back to normal, and so on, whatever you want to point to. So the dip that we're going to get in this one is probably going to be a dip in the growth rate rather than in the level of activity, right? We're probably not going to get a full-blown recession in Europe out of this one. And it's probably going to be a set of restrictions that are more targeted, more managed, and more concentrated. It's true that Austria is going a lot further than that, with mandatory vaccination even, as well as a more full-blown lockdown. But I think you still be supported by the fact that the economies have not fully normalized in Europe. And I think, it's unlikely that the US is going to go in that direction in any kind of concerted way, and probably not the UK as well. There'll still be some effect, I think, in the US and the UK, because there'll be sort of self-directed behavioral change by people who are concerned. Maybe fewer people go back to work, fewer people travel, commute, et cetera, socialize. So it probably implies some downward pressure on growth, but not a huge amount. Probably speaks to the rise in yields and interest rates being more sort of drawn out rather than precipitate, right? So more of a stretched out story than a very rapid one this time around, I think.
Anna, can I ask you about gold? It's nice to have someone on the program who looks at gold and thinks that gold is still relevant in the portfolio right now. It seems to have had a lackluster performance against inflation concerns, but I wonder if that's about the strength of the dollar. Well, what's your call on what you should be doing with gold at the moment? Is it too late to buy given the prices, or is there more upside to come?
Well, I think if people in the markets are really in team persistent and they think that not only will inflation be persistent, but that inflation expectations will become, quote unquote, unanchored and central banks will lose credibility, then I think, you really want to look at gold. So like I said before, I'm not really in that camp. And I think that explains why gold has been languishing. I think there is some risk that inflation expectations become unanchored. And therefore, you should probably consider a bit of an allocation to gold, but not a huge amount. Look, I think, with the dollar strengthening, with real interest rates potentially going to rise, and certainly, or well, not certain, but very likely tapering continuing, and very likely policy interest rates from central banks also about to rise. That's not very good for gold in the short term. And I think that's why it's languishing. The geopolitical angle here is very important as well. I think those tensions are important. They're going to be sustained, but they're not going to spiral out of control, at least not in the short term. And that's another reason why gold has been capped. So I think if I put all this together with the kind of cryptocurrency backdrop here, many people have been arguing that inflation hedging is moving away from gold towards cryptocurrency. Maybe there's some of that in some corners of the market, but I think more, there's speculation in Bitcoin and other cryptos. There's interest in the technology, and that's one way to play it. And I think, there is a little bit of, concern that if you do have rising yields, if you have rising rates, rising real yields, that can't be good for gold. It can't also really ultimately be good for cryptocurrency as a hedge against inflation, because you're going to be bringing down inflation as you go through that process. Right. So I think there are a lot of different things going on here. To sum it up on gold, I think it's worth having a bit of gold because there is this risk. I think the center of the distribution of outcomes is that central banks are going to regain control of inflation. They're not going to lose control of inflation expectations. So neither gold nor cryptocurrency is really going to protect you very much against something that isn't going to happen. But if you are worried about it, gold is probably the better hedge.
Thanks so much, Arnab. Good to have you on this morning. Thanks for joining us. Arnab Daz, Global Market Strategist at Invesco. Let's just give you a quick look at the Telecom Italia share price here. Occasionally, we've had trading curbs come in on this stock through the morning, and we're only, 22 minutes into the trading session. We've seen the price come off a little bit from the intraday high so far, but we are still up 20% or so as the market contemplates whether KKR's bid will get green lighted. Still to come on the program then, Germany's coalition government takes shape while lawmakers call for stricter COVID rules. As we see a surge in infections, we'll have more when we come back. Welcome back, everybody. Austria has entered its fourth national lockdown due to the current pandemic wave. People have been asked to work from home while non-essential shops will be closed. According to Chancellor Alexander Schallenberg, the lockdown will run for a maximum of 20 days. Meanwhile, many cities in Europe have been impacted by protests against increased COVID measures. In Belgium, protesters clashed with police after tens of thousands of people gathered in a march through the city centre. Meanwhile, demonstrations continued for a third day in the Netherlands following violent scenes and dozens of arrests in Rotterdam and The Hague, with thousands more gathering in Amsterdam over the weekend. And in Rome, large crowds gathered objecting to the enforcement of COVID passes.
In Germany, politicians are beginning to debate the need for mandatory vaccinations. The country's 7-day coronavirus incidence rate has hit record highs in the past 2 weeks, whilst the inoculation rate sits below 68%. The government imposed nationwide measures to protect against the unvaccinated, but lawmakers from across the political spectrum have said stricter rules may be needed. Germany's coalition government, meanwhile, is taking shape, with sources telling CNBC an announcement could come as soon as tomorrow. Two sources tell CNBC that the FDP leader, Christian Lindner, is set to be the next Minister of Finance. Annalena Baerbock will become the Foreign Minister, and Robert Habeck will be the next Economy Minister. Jeff.
Very much, Steve. Let's bring in Christian Odendahl, then, Chief Economist at the Centre for European Reform. Annetta's going to join us in this conversation as well. Christian, we have pretty good lines on this, then, that we are going to get an announcement probably through Tuesday, with Christian Lindner taking up that key post, running the money. How do you think the shape of this new government is going to affect fiscal outlook for Germany? What are you anticipating?
Well, this that Christian Lindner would become finance minister is one of those red lines that the Free Democrats put into this coalition, I think, as the fiscal conservative part. But they also know that there are quite a few investment needs in Germany and in Europe for climate matters. And so much of the economic debate in Germany over the past couple of weeks, even among economists, was around finding clever ways around the self-imposed strictures of the debt rules. And if you think about it, this is not the way we would like this coalition negotiation to go on, that we have to find tricks around it. The problem here is that, whatever they find in Germany in the coalition agreement to circumvent the debt brake, to make sure that Germany can do this investment that it wants to do, those cannot necessarily be sort of one-for-one implemented in Europe. So we will have a whole new debate then, starting probably after tomorrow, of how to translate this German coalition government's agreement into sort of a European stance. And this is what I will be looking out for.
What do you think in terms of innovation and also digitalization? Because clearly our country is lacking digitalization so much compared to others. That new super ministry under most likely Robert Habeck, do you think that's a good idea?
Well, the digital announcements of, pushing for more digitalization in Germany have, I think, been in every coalition contract over the last 10 years. So I'm not sure whether the announcement of such a program alone suffices. I think digitalization is a cross-sectional thing. You cannot just put it in one ministry and say, okay, this ministry now takes care of our digitalization. It needs to be sort of embodied in whatever we do at public administration and government levels. And that would be my hope, that basically the coalition contract emphasizes that point and puts a bit of money behind that. Because as you rightly say, there is a lack of digitalization on almost all levels of the German economy and of German public services.
Let me bring you to foreign policy as well, because with Annalena Baerbock now being most likely the next foreign minister, she's calling for something like an active defense policy of Germany. So what can we expect from a green pacifist foreign minister?
Well, it's funny that you call it pacifist. I think the Greens, they have a pacifist origin, but they have become a lot more realistic in terms of foreign and defense policy. And one of the things that the Greens in this position will bring is, I think, a newfound openness to debate things that should have been debated a long time. So, for example, how do we approach Russia and China and other autocracies that are increasingly making their muscle felt in the vicinity of Europe, for example? These are questions and discussions that the German public debate have not always confronted honestly and openly. And this, I think, is the biggest contribution. I wouldn't expect any sort of bold changes. That's not how Germany does change. Germany changes sort of slowly, a bit too cautiously maybe, but usually in the right direction. And this is sort of where I would think the impact of a green foreign ministry would also be.
Christian, I'm very interested, good morning to you, sir, about your comments in The Guardian quite recently about the changing German attitudes to debt. Of course, they've always looked at themselves in the mirror for the last 100 years about their attitudes to debt, but you're saying lower interest rates have changed that attitude. But has it also changed their attitude to commonality of debt, to the mutualization of debt across Europe as well? Because that would be an enormous Rubicon to cross for the German public.
Yes, absolutely. And we have sort of crossed this Rubicon with the EU Recovery Fund. I mean, the EU Recovery Fund crossed multiple German red lines, including common European debt. And I think the changing attitudes in Germany overall bring a new openness to debating these things, right? So the pandemic was an extreme case, but it was clear during the pandemic in the German debate that something needed to be done, that we needed to keep Europe together and strong economically. And I think this is taking precedence. Sort of this idea that in the Euro crisis, we were focused a lot on fiscal austerity and the levels of debt in Europe. Now it's about Europe's economic and political strength in the world. And I think this is what motivated also those who are not that interested in economics, motivated those to change course and say, okay, we will agree to a common European debt this time around to fight this pandemic. And I think it was an interesting lesson. You know, one of the things that we always asked ourselves about the Eurozone was, in times of severe crisis, is there a sort of fiscal ad hoc risk-sharing mechanism in play? And the pandemic provided us with that answer. That is yes, there is. And this is sort of something new that we've learned about the Eurozone during this crisis. And I think it's a good thing that we finally have sort of a relatively solid answer on that.
It's a great debate, Christian, one we will continue to have. Thank you very much indeed for your time. We do appreciate it today. Christian Odendahl, who is the chief economist at the Centre for European Reform, and Annetta, thank you very much indeed for kicking off with your questions as well. Right. Let's get back to crypto, because coming up on the show, Bitcoin trades below $60,000, uncertainty over taxation in the United States just creeping in a tad. We'll discuss the crypto outlook for 2022 coming up next.
Very good morning, everybody. Telecom stocks leading the Stock 600 higher. This as US private equity giant KKR launches a bid to take Telecom Italia private in a deal worth more than 33 billion euros, including debt. Ericsson agrees to buy American cloud communications firm Vonage for $6.2 billion, representing a 28% premium to Friday's closing share price. The CEO, Borchiejon, tells Karen on street signs whether it's a good deal. I suspect he will say it is, but we'll hear from him on street signs. That is a first on CNBC. Protests against fresh COVID restrictions hit Europe, with violence erupting in Brussels and Amsterdam as new cases continue to surge. And Germany's gender-balanced coalition nears completion. As sources tell CNBC, an announcement could come as soon as Tuesday, with key roles for the FDP's Christian Lindner, as well as the Greens' Annalena Baerbock and Robert Habeck. More than $130 billion worth of digital assets have changed hands in the past 24 hours, showcasing the growth of a sector that was little heard of a decade ago. 2021 has been particularly eventful for the crypto market, with Bitcoin up more than 100% on the year. In an exclusive interview, Steve and I spoke to Exos Financial founder and CEO Brady Dugan, who says crypto and the wider trend towards digitalization is here to stay.
Digitalization is something that will come to all parts of the financial services industry. Obviously, the legacy businesses are digitalizing much more slowly, whereas crypto, those markets have obviously started sort of with a blank slate, and there are huge advantages to that. For instance, that's the way we built Exos. We basically built our technology from scratch. That's a huge advantage to have. But the concept of digitalization, blockchain, making markets more efficient, using data analytics in order to serve customers better, to make the business more profitable, to use less capital, is an extremely powerful concept. And that will actually come across all of financial services. It's only a matter of time.
Brady Dugan, of course, who many will remember from his time running Credit Suisse, but now with his new fintech business. Well, Jason Guthrie joins us, head of digital assets at Wisdom Tree. Jason, good morning to you. We've actually seen Bitcoin, if we just focus on Bitcoin for a moment, slipping away from the $60,000 mark. What does that tell us about near-term trading of Bitcoin and other cryptocurrencies?
I try not to read too much into the short-term sort of price moves. You're right. We're trading at about 57, 58,000 at the moment, back off its sort of recent all-time highs. There's been a lot of talk about leverage in the market, but the market has ups and downs. Bitcoin continues to be relatively volatile, and I think this is sort of a healthy move as it consolidates a little bit.
Can we say that Bitcoin is correlated with anything? Is it an inflation hedge? Is it a gold type trade, or is it basically just a risk on punt?
Bitcoin and cryptocurrencies generally is still a very nascent asset class. So what they are is, I think, still being bedded in. It's definitely got inflation resistant characteristics. It definitely has store of value characteristics, hence the comparison to gold. But I think the growth trajectory going from non-existence 11 years ago to where we are today is the primary driver of what we see in sort of the price moves in the investment returns.
Jason, I haven't asked this question for people for a while, so I'll ask you the most basic question in the world. What is crypto? What is Bitcoin worth?
What is Bitcoin? Bitcoin is worth, it's priced in the same way any other asset is, right? It's worth what somebody's willing to pay for it. That's going to be a driver of demand. It's going to be sort of part of scarcity in there as well. But I think if you think about it, if you take a step back and try to think about it holistically, it should really be a representation of the value that that network brings to its users. And I think as we see more and more people, more companies, more countries starting to adopt Bitcoin, other cryptocurrencies, the use cases for blockchain technology generally, we're going to see that value continue to grow.
I think we're all very excited about El Salvador and their measures there, of course. But seriously, should our viewers buy it at $60,000? Should they wait till it's back down to $30,000 or wait to? I mean, you say you have to look at it holistically. We can value most other assets in the world by looking at relative valuations, by looking at historic valuations, by looking at the pool of liquidity, backing it up. What you're saying is you don't know what Bitcoin's worth.
As a price target right now, what it should be worth, it's very difficult to put your finger on it. I do think that the space is going to continue to grow. I think if you're a long-term investor, starting to dollar cost average in does make sense with an amount of your portfolio that you're comfortable with. I think that in the long term, this is going to be an expanding space. These networks are going to have an increasing amount of retained value within them. If you're asking, is this the best entry point right here? Short-term trying to time a market, Bitcoin or anything else is exceptionally difficult. It's definitely not the business that I'm in. But I think long-term, the growth trajectory of this technology, of this really transformative technology is only going in one direction.
No, I couldn't agree more. I'm very excited about the technology. As Jeff was saying about our Brady Dugan conversation, blockchain, fintech is absolutely extraordinarily exciting, and no one on this channel will tell you otherwise. But why is Bitcoin worth X when, as you quite rightly know better than I do, there is a vast amount of algorithmic mining for other types of crypto coin that can be available as well? I mean, there isn't a finite amount of other coins that can be mined, is there? I mean, so why is Bitcoin worth? Again, I'm not saying it's not worth $60,000. I'm not saying it's not worth $200,000. I just don't understand why it's worth any price at all when there's a lot of mining still to be done for other coin.
So the question about other coins versus Bitcoin, I think, has become much clearer over kind of the recent months. This idea that we are moving, that it's a winner takes all space, that either everyone's going to use Bitcoin or they're all going to use Ethereum or they're all going to use another coin is not the narrative that we see playing out in the market right now, but really it's a kind of multi-coin, multi-chain future where different sort of ecosystems, different blockchains are going to add value to different business models, to different use cases. Bitcoin itself is very focused on store of value, transfer of value. And I think for people that want to go to a system that is that they're able to have a high degree of trust in, reliability, that they're worried about inflation or stability with a very sort of computer-coded set of rules in it, Bitcoin has a lot of value for people that want to do that. I think we saw this move with El Salvador, and it's exactly those features that have appealed. Other coins out there, as you rightly say, don't all have the same supply dynamics, tokenomics, as they're called in the crypto space, but they're adding value for different reasons. And we're seeing this big growth in use cases of how people are looking to deploy this technology. It's not a winner takes all model. We're going to see some consolidation at some point. I think that's almost inevitable. But while we're in this experimental sort of phase as people try to find their feet for the use cases and business models, the growth on multiple different chains simultaneously, I think is absolutely natural.
Jason, let me ask you, we've obviously seen now ETFs launched supporting Bitcoin. That has given a second wind, in a sense, to legitimizing cryptocurrencies more broadly. What do you think the big headlines are going to be as we come into 2022 with regard to these currencies?
I think we're going to see continued adoption from the investment space. So this may be additional products coming to market. This may be a growth of sort of the institutional space and expansion of channels through which retail is able to access the products. I think that's a trend that we've seen. You note the launch of the Bitcoin ETF in the US as being another data point in that trajectory, and I think that is going to continue to happen. I also think that we're going to see, on sort of a related note, continued engagement from the regulators in this space. We've seen a lot of talk this year. We've seen a lot of action taken by regulators around the globe. And for me, I think this is going to be further moves to legitimize the space as they look to bring cryptocurrencies, digital asset related activity under their regulatory umbrella, under their purview.
Jason, excellent. Thank you very much indeed for answering our questions today. We wish you well. Jason Guthrie, Head of Digital Assets over at Wisdom Tree. Coming up on the show, the last little segment of the show, Telecom Italia shares, as Jeff mentioned, surging on the back of KKR's takeover approach. We'll give you a little bit more of this one after the break. U.S. House of Representatives has passed President Joe Biden's $1.75 trillion Build Back Better bill, a wide-ranging social spending package which includes investments in healthcare, child education, and combating climate change. The bill will need to pass the Senate, where a defection from any of the Democrats or independents could still sink it. The package could also be altered by senators, which, as you all know, would then send it back to the House for another vote. Meanwhile, the president, Mr. Biden, is expected to announce this week who should lead the Federal Reserve after the incumbent chairman, Jerome Powell's term ends in February. Powell is in a strong position to be reappointed for a second four-year term, as President Biden reportedly looks to secure continuity at the central bank. But progressive Democrats are pushing for Fed board member Lael Brainard, who is considered even more dovish by some than Powell in her monetary views. And of course, the bank regulatory side of things becomes very interesting. Brainard seen as slightly more hawkish, in fact, significantly more hawkish than Powell in terms of bank regulation. Meanwhile, on this side of the pond, the Bank of England Governor Andrew Bailey has said the central bank will have to raise rates, quote, if the economy evolves in the way the forecasts and reports suggest. Speaking to the Sunday Times, Mr. Bailey warned the situation is febrile, with the data not giving a consistent picture, suggesting a rate hike in the December meeting is still up in the air. The bank surprised the markets last month by keeping rates unchanged. And I know you had great fun over the interest rate decision in last month's Bank of England, Jeffrey. It was personally a lot of fun for you.
Well, it was interesting, wasn't it? I mean, reporter after reporter basically came in and said, are you now replicating the kind of behavior that we saw from Mark Carney? And it didn't take long for the first journalist to ask the question, are you comfortable now being described as the unreliable boyfriend? Because I think the Bank of England, in communications terms, does seem to have got itself into a bit of a mess at the moment. And I'm not sure how they get themselves out of it, because the market has begun pricing in expectations of a rate move for December. But have conditions really improved significantly between now and December for them to justify a move that they didn't take back in November?
Well, I mean, look, when you say the market's pricing in, I mean, the mealy-mouthed little 0.125, is it, that they're looking to price in as well? I mean, you know, I almost think they should just stick with it now, shouldn't they? It's such a tiny increment to the upside. We're not even talking about 25 basis points. I kind of almost think they should just stick with it. It's really not going to change the economic destiny of this country by changing rates by 0.125, is it? Maybe that's a statement of intent, a statement about the cycle. But again, it's such a small increment. I do wonder, Jeff.
Very interesting. Just to round out this segment, because I know I've got to talk about Telecom Italia in just a second, and before we wrap up the show, revisit it. But Carl Weinberg over at High Frequency, who regularly speaks to us, I know, is basically arguing that there should be no change from the Bank of England in December, him making the point that the economy is actually weaker than a lot of the analysts think at this point. And there isn't enough clear data for the bank to make a safe decision about hiking rates at this point. But we will come back and we will talk about it some more over coming programs. Let me just show you where we are on Telecom Italia. I know it's important that we keep in touch with this story. It is a very big news story in the telecom space. Beyond Italy, it has ramifications, of course, for many other telecoms companies, which is why we're seeing a bit of blood in the water. And the whole sector is higher here, with the market thinking, one, perhaps this may smoke out a competing bid for Telecom Italia, but two, this may also smoke out other firmer bids for European telecom companies. And I don't need to, for those who've been tuned in all morning, I don't think I need to spend too much time talking about how many telecom companies there are in Europe. But Steve, I think this puts the governments around Europe in a very interesting position with regard to whether they sign off on these deals or not.
No, I thought you made a terrific point earlier on about our the Italians open for business? Is this a new government that Draghi is auguring, a new style of government? And I appreciate your point, but I might differ slightly, because telecoms are underrated as a sector compared to the broader market for a reason. And that is because they are low growth these days, and they have heavy costs and high debt. And the rollout of infrastructure on countrywide basis, which is what you have to do in these utilities as well, is very difficult and very expensive as well. So the only thing I would say that differs from you, Jeff, is what is the private equity business offering for that side of the business, for the government and for the citizens of Italy going forward as well? Because if they only want the high growth, exciting bits, but leaving the fixed line regulated bits with the government and with the state as well, I'm just wondering how that leaves TI in a better position. I'll leave that question open though, Jeff.
Well, let's wrap up the programme on that, Steve. Thank you. Squawk Box closes, street signs about to start, and Karen will be talking about the telecom space with the CEO of Ericsson, Nokia. They have their own deal on the table. It's the first on CNBC. Stay with the channel.
morning and welcome to Street Signs. I'm Karen Cho and these are your headlines today. Telecom Italia shares lead the Stock 600 higher after US private equity giant KKR launches a bid to take the company private in a deal worth more than 33 billion euros, including debt. Ericsson agrees to buy American cloud communications firm Vonage for $6.2 billion, representing a 28% premium to Friday's closing share price. The CEO, Boya Erkholm, will be joining me in just 15 minutes' time. Elsewhere, protests against fresh COVID restrictions rock Europe, with violence erupting in Brussels and Amsterdam as new cases continue to surge. Germany's gender-balanced coalition nears completion as sources tell CNBC. An announcement could come as soon as Tuesday. Key roles for the FDP's Christian Lindner, as well as the Greens' Annalena Baerbock and Robert Habeck. Let's take a look at some of this market action. Quite a different market we're picking up on Monday's session versus Friday. Don't forget, coming to the fore, the fresh lockdown in Austria and concerns that maybe Germany would follow suit across the nation as well. But what we've got at this stage, investors just regrouping and trying to put a little bit more optimism back onto the table, and tons of deals taking place as we start out the trading week, which is having a huge bearing on the markets as well. So you can see as we start to travel through the session, a little bit more green just moving its way onto the charts at this stage, and that means we are perched slightly firmer and a modest tick higher, reversing course from that Friday trade. A quick look at some of the individual movers across the major markets as well. This is how we look at a country level. The FTSE, which don't forget had much higher ranges above 7,300 points, is now trying to pick up some of that lost territory again. It's up 1/3%. And 7,250 roughly the range we're trading in. We are in a similar percentage gain point level for the French market, 1/3% north. The DAX a little bit left behind at this stage, along with Italian stocks and the SMI, but a very strong run out of the Spanish market today. Stocks there on the IBEX up 0.6%. A quick look at some of the individual parts of this market where you're seeing gainers and losers. And I mentioned the deal activity. That is a huge focus for this market. Telecom Italia quickly shot up about 20% and up 22% as you can see. This after a $12 billion bid from the US fund KKR to take the company private in Italy. So that is a huge mover on the markets. And it's also having a huge effect on the telecoms market as we talk about consolidation. A PE player is not usual territory here. We've spoken about consolidation from other telco players over the years across Europe, with regulators, of course, one of the main stumbling blocks. But a private equity firm now seeing value in telecommunications. That's a big change for the sector. And you can see Telefonica is moving to the top of the boards this morning, 4% pop there. And we are seeing a move in the likes of Ericsson today. This is to the downside after the big deal we mentioned in the headlines around Vonage. It is a significant one for the company trying to expand its market share. We'll talk about that a little bit more, but the deal making moving the stock south. And Julius Baer, negative reaction to its numbers that it's posted today. Don't forget it's had a very strong run. So sometimes you can get a little bit more disappointment on the back of numbers for those stocks that have been the better performers, 3.5% south. Let's get into this broader theme around the COVID situation as Austria has entered its fourth national lockdown due to the current pandemic wave. People have been asked to work from home while non-essential shops will be closed. According to the Chancellor, Alexander Schellenberg, the lockdown would run for a maximum of 20 days. Well, this as many cities in Europe have been rocked by protests against expanding COVID measures. In Belgium, protesters clashed with police after tens of thousands of people gathered in a march through the city centre. Meanwhile, demonstrations continued for a third day in the Netherlands, following violent scenes and dozens of arrests in Rotterdam and The Hague, with thousands more gathering in Amsterdam over the weekend. And across in Rome in Italy, large crowds gathered objecting to the enforcement of COVID passes. I mentioned Germany before. Politicians there are beginning to debate the need for mandatory vaccinations. The country's 7-day coronavirus incident rate has hit record levels in the past 2 weeks, while the inoculation rate sits below 68%. The government imposed nationwide measures to protect against the unvaccinated, but lawmakers from across the political spectrum have said stricter rules may be required. The French Industry Minister, Agnès Pannier-Runacher, says the government is cautiously monitoring COVID developments in Europe. She spoke to me late on Friday at Women's Forum in Paris and said authorities will decide whether to implement stricter measures.
At this moment of time, we are following very cautiously the situation. But the situation seems to be, and as you can see, I'm cautious, slightly better than in Austria and that in Germany. And maybe it is because we have achieved a level of vaccination coverage which is quite high. 75% on the whole population is now fully vaccinated. And we have maintained sanitary pass in every public areas. So we have some kind of a tight control of the situation, the sanitary situation. But obviously, we will follow that closely in the coming days.
Let's get some thoughts on the latest COVID measures with Lawrence Young, who is Professor of Molecular Oncology at Warwick University. Professor, thank you very much for joining us. We are at the point in some countries across Europe where we didn't think we would be on the back of vaccinations. How concerned are you about the situation in Austria, first up with lockdowns, but also whether Germany may follow suit with some form of lockdown across the country?
Of course, this is extremely concerning, not only because of the degree of infection across the community, but the pressure that's putting on the healthcare systems across Europe. It's a combination of human behaviour and the amount of immunity in the population. And this is causing a perfect storm added to the winter weather where more people are driven inside and where the virus can transmit more easily, particularly in poorly ventilated spaces. So it's a very, very difficult situation across Europe.
Professor, the situation has refocused the debate around what type of COVID measures are required, because we have seen a patchwork approach globally, from a zero tolerance approach in China to here in Europe, particularly the UK, where there was a rip off the mask form of Freedom Day a few months back. What is the right approach at this stage as we talk about battling the difficult winter months?
Well, it's clear, as I said earlier, this is a combination of the level of immunity in the population, and that's a combination of the natural immunity you get from COVID infection. But what does all of the heavy lifting, really, or most of it, are vaccines. So you need to get vaccines rolled out across your population, and you need to encourage people in a very positive way and reinforce the message that vaccination actually works. It does weaken significantly the link between infection and hospitalization. And I do wonder about how effectively that message has got across in other countries in Europe. But also we can see that non-pharmaceutical interventions, in other words, wearing face masks, does have a big impact, as does social distancing. And it's getting that combination right. Whether you can compel people to do this, particularly when you remove restrictions, is very difficult. But I do think a lot of this is about government messaging and the trust that populations have in their own governments.
I want to know whether we can talk about Europe as a collective this year. I mean, last year it felt like we were just seeing a rise and escalation in COVID infections across the bloc. One country followed each other. But since then, we've had slightly different vaccination rates. And I call that, for instance, the Portuguese economy. You've seen very strong inoculations in Portugal versus some other places. Is it different this year? Will we see very different COVID situations play out across Europe because of the vaccination rates and also the use of COVID passes?
Yeah, it is, and so that's why we're seeing this heterogeneity in the levels of infection and the impact that's having on hospitalizations across Europe. A lot of it is to do with the success of the rollout of the vaccination, including the degree to which countries have vaccinated their 12 to 15-year-olds, where we know a lot of the virus circulates and spreads to the older, more vulnerable population. And again, this has been very patchy across Europe. So it is a real combination, again, of vaccine uptake in different parts of the community in different age groups, and whether people are maintaining social distancing and wearing face masks, be that voluntarily or be that because of the maintenance of restrictions.
You may have seen that clip I just played from the French industry minister. I was in France late last week, and they were hopeful that they were just not following other countries down this pathway of a rise in cases because of their inoculation rates, but also because of the wearing masks in some areas and these COVID passes. Do you think the French have the right to be confident at this point about how they're handling the COVID situation?
I think what all of this tells us is there's absolutely no room for complacency or indeed confidence when it comes to this virus. But it's for sure that if you've got reasonable levels of vaccination in your population and you're maintaining some of these other restrictions, then it's going to have an impact. We've seen that. If we look at Israel, which is a really sort of a case study, we call it the canary in the mine, really, because it tells us what we should be doing. They had very high rates of infection and reinfection over the summer after having a very successful vaccine program. And now they have very few cases because they have really enforced the booster vaccines alongside vaccine passports and face mask wearing. So there are these combinatorial approaches that really do work in dampening down the spread. But you can't be complacent. The more this virus spreads, the more likely it is to throw up another variant. And that's the big concern we all have. We are all facing the consequences of the Delta, and the Delta wave is really what's fueling the infection across Europe. This is a much more transmissible infectious virus, and it is responsible for the so-called fourth wave that we are experiencing in parts of Europe.
I think everybody has their fingers crossed around this variant situation. But if I can ask you about hospitals at this stage, because there are concerns that what we're seeing in some countries is triggering the more strict restrictions at this point, the lockdown measures in some countries, because of fears that hospitals will become overloaded. What happens this time? Because there are different tools and medicines available. With the vaccines, you hope that people don't get as sick this time round. There's also this Pfizer pill if you do get ill, not to mention other various measures that have been tested now the past 12 months plus. Do you think there are more tools so you don't get a situation where hospitals go into some sort of overload situation this winter?
Yeah, clearly the big concern in hospitals is not only COVID, but it's the combination of COVID and other respiratory virus infections, which we know put undue pressure on healthcare systems every winter. So flu and getting people vaccinated for flu is just as important as getting the COVID jab. But you're absolutely right. We have more tools now to manage the infection. It's much better to get vaccinated and not to get sick in the first place, of course. But if people are vulnerable or their immune systems aren't efficient at responding to vaccination, then we have a couple of drugs now, actually, that can help at the very early stages of infection. So these are people who are diagnosed very early on and just in the early stages when they just get symptoms, but we know that could lead to more serious consequences. These drugs are very effective at supporting those individuals. So again, the availability and rollout of those drugs in different healthcare systems across Europe is extremely important, alongside what we know is better management of people when they do get sick. But the important thing, I think, is just to get as many people vaccinated as possible and for people to remain cautious.
Professor, many good points there, particularly the one about other illnesses. And we know there wasn't much of a flu season last year, but this time around, I think we all know someone that's caught some form of a vicious flu this time as well.
Okay, guys, so we did so far 3 trades. One was $42, second one $3.73, and the third one $2.08. Okay, that's it for today. I will talk to you tomorrow. Have a great day, everyone.